All right, guys. So really small group Zoom today. So I'll leave a lot of time for questions here. I just have a few things I wanted to cover, and then we can leave it open for Q&A. So first, does anyone have any general questions like how to place a trade, manage it, all that stuff?
No, you've been answering all my questions.
All right, Roberto, you good?
Yeah, no, I think I got it.
Okay. All right, so I'm going to share my screen. We're going to look at some possible management techniques that could be useful. I don't necessarily do these, but I just wanted you guys to know about them in case you want to be able to either take profits at pretty much lock in your profits at a certain time, or if you want to manage it with a different methodology than I do. First is how to take profits when the position's already good. So I'm just gonna make an example. Let's say we have SPX. Let's say I'm doing a zero ETE trade, 53.96. Pretty bearish. Again, this isn't necessarily what I'm gonna do tomorrow, but just let's say we did a 55.30 call, and then we buy the 55.40 call. I gotta get used to the command shift here. Ah, I got one more coming. 55.30, 55.40. It is. I'm still getting used to this MacBook, to be honest. It's not letting me control click. There we go. Okay. All right. So this would be a call credit spread because I'm selling the 55.30. That's a little closer to the current price. And then I'm buying the 55.40 a little bit further away. And right now we have a credit of, let's say, around $40 or so. Let's say we place this trade and then the market continues to drop. As it drops and you're getting closer to the end of the trading day, this option will be worth less than what you took in for it. So maybe in a few hours after market opens, it might be at say zero point 0.1, 0.15. In that case, once you get on the trade, you could go to your monitor tab, find your open trade, and then what you're going to do is essentially buy it back. But instead of a limit order, you could change this to a trailing stop order. Does everyone know what a trailing stop order is, or have you ever used one before?
No.
Never used it.
Okay. So a trailing stop order, the way it works is, let's say it was down around zero point 0.1 or so. You could close it out if you took in, say, zero point 0.4 and you bought it back for zero point 0.1. You would be up $30 in this case. But let's say you want to try to get the full $40. What you could do is a trailing stop order, and then you're going to see a TR and then a plus and then a point something. What this means is if the order was already at zero point 0.1, you could set it up so that if it happened to go up a certain amount, let's say it went up zero point 0.1 more, that would be zero point 0.1 plus zero point 0.1 or zero point 0.2. If it happens to get to zero point 0.2 in the spread, then it will just close it out for you. Does that make sense?
Yeah.
Okay. Now, what if it got down to 0.05? If it got down to 0.05, then this trailing stop is going to move up from 0.05 plus zero point 0.1. It'll be 0.15. So if the spread gets to 0.15, then it'll close it out there. So essentially, it's going to be moving your stop, whatever the amount you put here. It would make a little bit more sense if you did an option that had a little bit more premium on it. So if we want to look at, I'm just going to pick Amazon for instance, and let's say we go out 40 something days. I'm just going to pick a delta, let's say 150, 145. This pays about $59 in credit. Let's say you're on the trade and it's decaying a bit. Let's say it goes down to say zero point 0.3 or so. In that case, you'd go to the order entry and buy to close it first. So you'll see this come up. Do trailing stop. And then you essentially want to say, where are you okay with it going to, where you're still okay closing it out? If you sold it at say 0.6 and it's down to 0.3, I think around a 0.1 would be perfectly fine as a trailing stop. So that means 0.3 plus 0.1. If it got to 0.4, you would close it out. In that case, you would have made $20 or so. But if it keeps decaying, let's say it goes to 0.15, 0.15 plus 0.1 would be 0.25, and it'll close it out at 0.25. So essentially, you're locking in a certain gain. I probably would do this only when it's already at a decent profit. Wouldn't necessarily be like 100% profit. But if something's around 50% profit or so, meaning if you sold at a 0.6, if it gets to 0.3 and you can close it out there, that might be a good time to do a trailing stop. We're perfectly fine for closing at say 0.4, or if it keeps dropping down, you're locking in a little bit more gains. Does that all make sense?
Mm-hmm.
Yeah, I
Little
do
bit?
have a question.
Go ahead.
I just started doing these SPXs. So you're saying, like, let's say you got a 40-cent credit, and you're up. How can I see where it's at that time? Like, let's say it's an hour and a half later. How can I see where it's at?
If you go to the monitor tab, if you look at P&L open, and
Yeah.
if that's not one of your things right now, you can click the little gear icon over here and then add P&L open. And then you just find it, click the add button. P&L open
Oh,
will show what the current option is at. So these are a lot of the spreads that I did. Let's look at say AVGO. Right now it's about even. I know the market's closed, so it's hard to say if it's actually up or down too much. But let me find one that actually has a P&L of something. Google, for instance. All right, so Google was my trade price was 200 on the 140, 1.33 on the 135 that I bought. You want to subtract these to get the trade price. So that's 200, sorry. Um, 200 minus 133. I took in $67 on that trade. Then what it's going to do in the P&L open column, it's going to look at the mark price, which is not always accurate. Mark price is just what the middle price is of the option at the time, but that doesn't necessarily mean you'll get filled there. Right now,
okay.
go ahead.
So the difference in the mark price is what it would be at now. Is that what you're saying?
Yeah. Yes, but also the market's closed right now, so it's a little bit off.
Yeah, I understand. So it would be the 4.17 minus 3.0, and that's what it would be at
Yeah,
now.
you would subtract those two. So that's
Okay.
around point 0.9 something. The difference of what I took in, 0.67 to the
Yeah,
point 0.9 or so, is the P&L open. You see a parentheses, that means it's a negative. If it's
yeah,
not a parentheses, it means it's a positive. Okay.
yeah.
So yeah, P&L open's a quick way to see it. Another way you could just manually look. So just on your monitor tab, highlight the two positions and then do create closing order. And you're going to see right here, it's around 1.17 or so. So that's why
Oh,
it's at a little bit of a negative right now.
all right. This is a little new too because I've been doing it on my phone mostly, but yeah,
Yeah. It's the same idea on the phone. You'll just click the two options, click the little boxes, click create closing order, and it's going to show you what the mid and the natural prices are.
okay.
Do
Thank
you
you.
know, do you know how to set alert prices?
Yes.
Okay, good. Simple way is just click on the stock price, create alert. And that's what I was actually going to talk about. There's different alerts you could do. So the simple one I say is at or below a certain price. You add or below and then the price that I enter in. But there's a lot of other things you can look at here. One of the ways that might work is looking at the delta of the sold option. If that delta gets a bit high, that means that we're closer to the strike price. There's a greater chance that it might hit our strike price, and that's not a good thing if we're selling the spreads. So what you could do instead is do an alert on the delta. So here right now I'm at a 0.28 delta. I was definitely lower than that when I entered it. I don't remember the top of my head. But you'll just right click it, create alert, and you notice I right clicked it where it says delta on it.
Yeah.
You could do the same thing on a phone, I think. I'll have to double check, but you have to like highlight the delta button. Now on delta, it's gonna say a negative here. Just be aware of that. Right now, it's a 0.28 delta. That's negative. Let's say that I'm a little worried. If it gets to maybe a 0.4 delta or so, and it should stay negative 0.4, you could create alert here. And then if it happens to get to 0.4 delta, I'll notify you. It's a similar way that I do my alert prices based on the stock price.
Okay.
Does that make sense? Anyone else here have any questions on that? So what I'm trying to do in my alert prices is try to make a pretty much a educated guess on where the delta would be before I'm willing to get out of it. It usually ends up being about 2 to maybe 3% from the strike price. So if I sold the 140 put, if you do about 2% of that, that's around 143, 144 or so. And that's usually where I want to get out because if you only have a 2 or 3% cushion, or 2 or 3% out of the money, there's a good chance that it might touch that strike price. And then at that point, you're going to be more than a 3x loss in most cases. Yeah.
So that's the 0.3 you were showing me on the phone, Dan, or then
Yeah, I
the
think
stop
so.
loss. Okay.
Right. You could do it with a stop loss too. Just be aware in your stop loss, your bid ask spreads sometimes are a bit wide. Even for Google, that's a pretty high volume stock. Right now we have a bid of ask of 4.1 to 4.25. So that's a 0.15 difference.
Oh,
Sometimes that might stop you out of a trade a little early if it happens to get a little wider in most cases. So
so
just be
you never know where it's going to get filled in there. It's going to be somewhere in there, though. Oh,
yes. You'll always get filled at the ask if you're buying an option, and you always get filled at the bid if you're selling it for just one leg. If you're doing multiple legs like a spread, then it's really taking into account both of those. So that's a little bit more of a simplified answer there. But yeah, one leg you're going to be
Ah.
the better ask.
mm-hmm.
All right, I'll leave it open for any other questions as you guys have them. Nina, Denise, Roberta, open office hours.
Right. I'm wondering if you can show me how to set the stop limit or what you call stop loss on Tasty Trade platform.
Okay, give me a second. I gotta log into
Okay.
it.
Yeah.
Yeah.
Give me a second. I gotta share screen and then get it. I'm just
Okay.
waiting for it to log in right now. All right. So stop order on a stock or a futures, Nina?
Future. Future would be
Futures.
good.
Okay.
Yeah.
It's the same process. Um,
Yeah.
so let's say a backslash MES already had it open, and
Uh-huh.
um, I have a few on Tasty actually. So I
Yeah.
have this one that's a 52.75. That was one of our weekly trades that we did. You'd go to actions, close position,
Uh-huh.
then order type, just
Mm-hmm.
do a limit order to buy it back at a certain price. You
Uh-huh.
can't do a stop order on futures, unfortunately. You can
Okay.
do a limit order for futures. For
Oh,
stocks, you could do a stop order.
uh-huh.
So
Okay.
there's a few ways around what you could do is you could set an alert price if you want. Um, I remember on phone, I'm not sure. You could, oh yeah, you could do alert here.
Oh,
And then
okay.
you could set an alert based on where MES is at the time. So let's say I'm in the 52.75 and I want to get alerted if it touches that strike price,
Mm-hmm.
52.75, and then you want
Mm-hmm.
to go less than,
Mm-hmm.
because right now we're above it. So if it drops down to 52.75, I'll do
Mm-hmm.
that on mine too. Just click create alert. And
Mm-hmm.
then if it touches there, then you will be notified about it. And then you can
Okay.
roll it or close it or,
Yeah.
as what
Uh-huh.
you want on it.
Uh-huh. Could I ask a language question? Is the trigger and alert, are they the same thing?
Trigger is, yeah, it's the alert. So you'll get notified. I get a text message on my phone whenever
Uh,
it touches that price.
okay. Cool.
I
Uh-huh.
would do, you could do the alert on the last. If you want to be a little bit quicker on it, you could do the alert at the ask price because that
Uh-huh.
will happen a little bit quicker, but it could be seconds. It's probably not a big deal either way.
Mm-hmm. Mm-hmm. Yeah.
Yeah, but unfortunately, there's no stop orders on stop.
Okay. So the other question, so how can I do that on the stock?
It's a very similar way. So, um, I don't have many stocks here, but let's see.
Oh, okay.
Apple, I don't know. I'm just gonna pick one. At 1.9, you could just do Apple here, create alert. Did you want to do a stop order on it or an alert on
Stop order, like
it?
kick me out if it
So,
doesn't.
so you can do a stop order when you enter or exit. I'm not currently in this, but let's say I was in it, and then you go to your positions tab. You essentially find the order,
Uh,
close position,
yeah.
and then under order type, you just click stop. Now there's a stop market and a stop limit. A
Oh,
stop market order is if the premium got to whatever price you put in,
uh-huh.
say it triggers at like 3 or something,
Yeah.
it will close it at the best available price once it
Okay.
touches 3.
Uh-huh.
It
Uh-huh.
could be worse than 3 though. It could be 3.05 or 3.1,
Mhm.
depending on
Uh-huh.
what happens.
Yeah.
If it shoots up, you could get hurt a bit. So let's say the options are just going really badly. You might get closed out at 3.5, 3.6, but you will get closed out no matter what. So there's
Uh-huh.
kind of a pro and
Yeah.
a con to that.
Yeah.
A
Uh-huh.
stop limit order is
Mm-hmm.
where you set a limit price. Let's
Mm-hmm.
set it at, well, so the stop price, let's say you keep it at 3. The
Mm-hmm.
limit price, you want to do it a little bit higher. Let's say
Mm-hmm.
3.1, for instance.
Mm-hmm.
What will happen here is if the premium got to 3, it's going to set a limit order to
Mm-hmm.
close it out at 3.1.
Mm-hmm. Mm-hmm.
And then if it gets to 3.1 and it's able to fill, you will definitely be closed out at 3.1. You wouldn't necessarily get screwed if it went to 3.4, 3.5 or something like that.
Okay. Yeah.
The
Uh-huh.
the problem with it is if it shoots past the 3.1, you may
Mm-hmm.
not get filled on the order and it can
Mm-hmm.
keep going against you more and more.
Oh, okay. Yeah, so I think I rather do the stock market.
In
Yeah.
most
I
cases,
don't mind. Yeah. Uh-huh.
I almost always do a stop market order.
Uh-huh.
Stop
Yeah.
limit could be dangerous. If it doesn't fill, then you could
Uh,
possibly lose even more. I
yeah.
almost never use stop limit. I almost always use stop market.
Yeah.
Yeah.
Yeah. Uh-huh. Yes. Uh-huh. And this one is just for the stop loss, right? To protect in the worst situation. But let's say like tomorrow, the market came to like favor my position, so I can cancel this order
Yeah,
and put the take profit order, right?
sure.
Uh, yeah.
Let me think how to show that. Um, I'm
Mhm.
just gonna I can't do a stop order. Let me think. Um,
Mhm.
if you go to your activity tab right here, you
Yeah.
will see the working order to try to
Uh,
close it.
yes.
So it will say status open here because
Uh-huh.
you're working, I think, because it's not
Yes.
done yet.
Yeah.
And
Uh-huh.
then you would just click cancel.
Okay.
And
Yeah.
then what you could do is if it's profitable, first cancel that stop order, and then you put in a new order to close it out. To close it out, there'll be a limit order.
Okay.
You could also do a stop, I guess, but I would just do a limit order. That's actually a good point. You could do a stop order on a position that's still profitable. You
Mhm.
can't do a trailing stop on Tasty Trade though. Only
Mhm.
Thinkorswim has that, from what I'm aware of. Yeah, they don't have a trailing stop.
Mhm.
So
Yeah.
yeah, let's say you sold the spread at 0.5, it's down to 0.2. You could do a stop market order at say 0.3,
Uh-huh.
where you're perfectly okay if it got to 0.3 because you still profited on the trade. And if
Yeah.
it doesn't get to 0.3, you'll stay in the trade until it either expired worthless or it got to 0.3. And in both cases, you're happy with it because you're already at a profit.
Okay. Yeah. All right. Yeah.
You could also
Thank
do a
you.
limit order. So yeah, do the stop order. If it say it drops even more to like 0.05 or 0.1, you could cancel your stop order and then just put a limit order to close it.
Mhm.
It's a little bit more active than you need to be. You don't necessarily need to do all that stuff, but I'm just giving some ideas. Like if you're a little
Okay.
bit more active, you could do those things.
Yeah. Uh-huh. All right. Thank you so much. Yeah.
Problem.
Okay. Let others member ask that question. Thanks.
Sure. I guess Aiden just joined. You have any questions so far, Aiden? You can unmute your mic.
Hang on. Just 1 second.
Okay. Kirk or Dinesh, for now, while you're waiting, you have any questions?
I'm good right now.
Okay,
I'm going through just setting up on using my desktop. It's
right.
a
It
little
takes a
different.
little getting used to do both. That's why
That's
I'm not
that's
even that good on the desktop because I almost never use it. Like I use my phone like 99% of the time.
yeah, yeah. It's easier for me because I'm in and out of home all day long. But it's I can see it better what I have on the desktop
Yeah.
and the whole platform on Tasty Trade.
When you're doing Tasty Trade or Thinkorswim?
I'm sorry, Thinkorswim.
Yeah, I thought you were doing Thinkorswim.
Yeah,
Do you
sorry.
set up your alert notifications where it tells you on your desktop and your phone?
I've just done it on my phone where I just go in, I type in the number, and it
Yeah.
sets it up right away.
Yeah, but also on the notification, I'll show you on the
Little
notification
the
screen.
little bell comes, or yeah.
Yeah, but you can set it up on your notification screen where it'll alert you both on your phone and on desktop.
Oh,
So like create alert and then notify with. You could do push notification to mobile devices. If you're on phone, actually, I think, but I'm not sure, but I think the default is it'll notify you on desktop also. If you're setting up the notification on desktop, you'll have to make sure you click this because you already linked your phone number into the account.
where did you get that drag and drop at? Where was that?
when I
The
just create an alert on desktop.
yeah, what did you click on? Oh,
So
you
let's
just
say, yeah, main way is just to click on the price,
yeah.
create alert,
Okay, great.
and
I
then
like that. Yeah, I like that because I'll do it on my desktop. I can see SPX on my desktop,
right,
and then I might be leaving, and then it'll alert my phone. That's fantastic.
right. Just make sure that this is checked off. It probably defaults that way, but if you didn't want your phone to get busy, you could unclick it. So then you'll only get notified on desktop like that. And
Make
then,
sure make sure it's clicked on. Yeah. Okay.
yeah. But yeah, fiddle around with the alert stuff because you could do a lot of different alerts, not
There's
just the stock price.
there's so much in there and everything. I just like it's overwhelming.
It is.
It can be, yeah, for sure. Can you hear me, Lance?
Yes.
Oh, perfect. Okay. Question for you. For the SPX 0 DTE day trades, do you typically set up like an OCO on those, Lance, or do you just basically execute it and then kind of manage it accordingly thereafter?
I personally do the second thing you said, but you could OCO it if you want to,
Okay.
where I'm usually trying to let it expire worthless.
Mm,
When the volatility is high like now, if I did say an iron condor tomorrow with the volatility of 28 or whatever it is, actually, is it
mm.
30 yet? I think it hit 30 this.
The VIX was creeping up towards it today, I believe. Yeah.
Yeah, so at this point, I did an iron condor and I'm taking in, 100, $110 or so.
Mm,
I'm not going to get greedy and wait all day for it to expire worthless. I'm
right.
probably going to take profits typically around zero point 0.6 or zero point 0.5. Like
Mhm.
ideally I try to get at least zero point 0.3 premium. So just subtract the premium you took in minus what you buy it back for.
Yeah, the premium this morning on the call credit spread was pretty good. I think I got
Yeah,
it at like around $50 or so.
that was
No,
good.
I exited I just decided I was all done trading at about 11:15. So I just got out at like $25, 50%. But to your point, I usually take it around 60% of a gain. So
Sure.
if I'm in at 50, I'll try to take it at 20. And
Yeah,
then the stop loss is interesting. Like I was in a trade the other day where I think I got in for 70. There was a good entry price, and it was hovering around the 70 for kind of a period of time, and then suddenly it started to shoot in the opposite direction.
yeah,
And I was like, you know what? I'll let it run up to 140 and maybe I'll just exit at 140. And then it started to creep up to like 120, 125, 130. And this thing was rapid. It just like rapidly started to staircase that. But then it suddenly started to go in the other direction. And I was watching the price on the 1 minute chart, just watching the candles. I had my MACD and my squeeze and a couple of other indicators set up, and it finally got back to like the entry price of 70, and then it went to 60, and I said, you know what, this thing is ain't turning around.
yeah,
I felt like the momentum was exhausted. I said, I'm just gonna get out, and lo and behold, an hour later I checked it, it ran to like, I don't know, like 240, 250, 260.
yeah,
So yeah, so it's that's my only concern with the OCOs is when I started trading, some time back and was trying to figure out kind of think or swim, and think or swim is like trying to fly a Cessna. You really need to be with an
I'll still
experienced
not.
pilot for a long period of time to figure out all the nuances and all the quirks in it. But
Sure.
when I started first using OCOs on swing trades, I remember when the market would open and the volatility in the market and the prices. And on one trade, I literally got stopped out. And I was like, what the hell? Why am I getting stopped out here? But what had happened was the mark price had jumped so violently,
Yeah,
either in one direction or the other, but it triggered the OCO, and I was like, I'm never doing this again. I'll just set up an alert and I'll manually kind of but at the same point, when your SPX 0 DTE is running and it's running in the opposite direction, like really, really quickly, and it's accelerating, that's when probably when if you have an OCO in place, yeah, that's probably a good idea at that point where it's capturing it if it's running in the other direction.
yeah.
Yeah.
That's more of a swing trade type strategy in the end. I just take the trade and then I do the stop loss at a 3x premium. I don't do the
Mm,
OCO, but that's perfectly fine to do an OCO. I just manually look like, okay, I'm up 30, $40 or whatever. and then I'm like, okay, I'll close it here. So
Mm,
that's just me, but there's nothing wrong with an OCO.
yeah.
You could
I mean,
even do an OCO with a trailing on the profit take if you
mm,
want to.
right.
So you could let it run a little bit. If you say you enter a point at 1 and it's down to 0.6, you usually get 60%. So let's say it's at 0.4 at that point.
Mm,
Just cancel out your stop out order and then just do a trailing stop at that point at say zero point
okay.
0.1 or 0.15 or something. So it might keep dropping down. And if it doesn't, you're still closing at 0.5 at worst.
Got
Just
it. So you're capturing your gain, but
exactly.
you're trailing at it. Yeah,
Essentially locking in
that's a
the
good idea. That's a good
I mean,
idea.
you probably do that with swing trading anyway. Like if
Yeah.
you bought like a call option and it went up, you might do a trailing stop at like zero point 0.1 or whatever it is. Um,
Mm,
just notice that when you're doing this with selling premium, it's just say a negative on there because you're essentially wanting it to go the other direction.
mm,
Everything's warped and backward and flipped essentially when you're selling it.
right.
Because we're starting selling and then you end buying. In your
Yeah.
swing trades, you're starting buying, you're ending selling. So that's a
Mm.
positive number.
Yeah, I'm beginning to kind of really appreciate your strategy here, the day trading, the SPX, the zero DTE, because I've always been on the other side of the equation. You know, I mean, I've day traded the Qs for, a period of time, and I use active trader to, if I see something and I've got a setup, I'll do like maybe a 30 or 25 delta call, and it's right in active trader. I have an OCO, and boom, and it all happens rather quickly. But one of the things when you're buying calls or puts is that theta decay on the zero DTE. If you get into something and it's like a squeeze, you're in a squeeze alert where you're waiting for time to momentum. That can be a killer, man. Oh man, like just watching that time decay. And it's frustrating because you have the direction of the price, right? So
Yeah,
yeah,
the
but
time
what
is against it.
but the time, yeah, the premium is just killing. Whereas conversely, with your strategy, if you're in that kind of like consolidation phase, or if it's kind of ranging, that's a beautiful thing because time decay is
Yep.
working in your favor. And also, of course, as long as the DT is really out of the money, zero point 0.1 delta, like basically you still have that high probability that's kind of working in your favor. So I'm beginning to appreciate that much more than when I was on the other side of the equation, basically.
Yeah.
Yeah.
Wasn't there a
Yeah.
song about that time that's on our side? That's what I
There
forgot the
probably,
name of that one.
there probably
But
was. There probably was. Yeah.
I'm not much of a buy side person, obviously, because we're a sell side. But if you
Mm,
consider futures instead of buying call options, like if you wanted to do MNQ, try to buy an actual futures option outright, or sorry,
right.
just buy the contract outright. Don't buy the option for it, and then
Yep.
you don't have theta decay at least.
Right.
Um, it's
Yeah,
not.
and you also don't have to worry about the PDT as well, the pattern
Yeah.
date rule as
That's
well.
too.
So,
And
yeah.
it won't necessarily move as much as if you bought like a QQQ option in
Right.
general. If you buy a zero DTE, it's gonna move faster than buying the MNQ or just NQ. But you could buy a few days out too, just to keep it slower and you can manage it better.
Mm.
Yeah, futures are a good way to go with that stuff instead of buying the options.
Instead of buying options, yeah.
If you're thinking like buying the QQQ options for like a scalping type trade is a little too quick, you could consider going maybe 2 or 3 days out instead of
Mm,
buying the zero DTE. And
right.
still might open and close it the same day. Still counts as a pattern day trade, but
Right.
at least it won't move as fast because the more time you have, the slower the theta decay. So it
Right.
won't hurt you as much,
As much, yeah.
but it also
Usually,
won't move as much as the zero DTE.
yeah, usually when I'm day trading, it's scalping. So, the positions are, I could be in and out in 2 minutes. If I get the right move on a momentum candle, boom, just
Sure.
in and out. Or, if I have a setup where, we're beyond two standard deviations in one direction or the other,
Yeah.
and I have a Bollinger Band kind of alert set up. So basically a TTM squeeze, the
Yeah.
time to momentum. So the alert signals, and then I use I have on TradingView I have an indicator from Lux Algo. I don't know
Yeah.
if you're familiar with that, and it's
I
uh
have them. Yeah.
it's so basically that's kind of like so there's a couple of things that I look at, and then the indicators kind of tell you one thing, but the price action is more important. In other words, are you looking at a doji, possibly a reversal candle, things like that. And then you kind of have to act quickly. But to your point, the result has to be pretty quick,
Yeah,
meaning that, if you get something and it moves, then that's it. You get in with the active trader, you start moving with the active trading ladder, and you can start, if it moves, you can just move up your stop loss, and if it moves the other direction, then boom, you get out. But at least you captured something.
right.
Well, one thing that has been frustrating sometimes is if you just kind of, leave your stop loss and just kind of let it move, and you're like, okay, well, this is my entry, and I kind of expect it to hit my target. Then now you're prone to this kind of time decay thing that we spoke about. But one thing that I've been using on the day trading charts is something called ATR, which is
Average true range.
yeah, the average true range. And what I do is I set that up for a period of like one ATR, 3 periods, and I found it like super effective. So if I have a like a Bollinger Band, like a squeeze where the Kettler channel comes inside or Bollinger Band comes inside the Kettler channel, so I get a squeeze, and then suddenly boom, 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 it releases. And I have a signal, and I kind of confirm it with my Lux algo, and yeah, so basically, if everything is lining up at that point, and it looks like I have a high probability trade, then I'll take it. But again, if you get caught in this like type of consolidation pattern, it's yeah, you got to get out, and you got to cut your loss. Yeah.
Kirk, do you have any idea what Aiden just said at all? It's okay if you don't.
Yeah, you must have heard me laughing.
That's all right.
No, I'll tell you what, though. I did want to ask him a question because
Sure.
15, 20 years ago, I live in Vegas, and I ran money for a group that scalped and middled. So I was very familiar with the process of the scalping. And we bet myself alone, I bet hundred thousands of dollars a day doing that. The whole industry's changed now. You can't do it like you used to. That's why I don't do it anymore. I was just kind of that piqued my interest a little bit because I've always liked that.
Mm.
I'm wondering like what it is, the indicators, just like the basic indicators you're looking for when you see a scalp possibly coming up.
Yeah, so what I use is I use the 1 minute chart, and I typically have a 9 EMA, so a 9 minute or a nine exponential moving average that's based on the 1 minute chart, and then I use another indicator called the VWAP, which is the volume weight average price. So those are kind of my two big ones. And I have another type of strategy that I use, which is called TTM, or time to momentum. And it's based on a Bollinger Band, Kettner paradigm. And basically, what it does is when the price is kind of constricted or consolidating, you have this squeeze going on where there's a very narrow, like tight range, and the price is very attenuated. But you can kind of think of it as like a buildup of kind of like momentum, a buildup of energy. But it's kind of like almost kind of like you're grinding. You're grinding something, or you're coiling something like in physics, and you've got like this buildup of kind of like elastic and kinetic energy, if you will. And this can go on, sometimes it can go on for a couple of minutes, but what's interesting is when it fires, it will fire in one direction or the other. And that sometimes can be a good indication as to kind of what's going on. But you
How are
got
you? How are you deploying the scalp and deciding which way it's going to go, though?
Well, that's a good question. So basically, the momentum indicator, the TTM, will tell me kind of what direction it could be going. But
Okay.
what I have to do is I have to look at price action to confirm that, and I have to couple that with volume to see if the volume is supporting the price action in that direction. And then I look at the direction of the EMA, the 9 EMA. So if it's bowing upwards, then that basically means that the price is likely to move up, not necessarily going to move up, but probable. It's likely probable that it's going to move up. So it's kind of to answer your question, it's a couple of things. It's like using the indicators, using the EMA, the 9 EMA, using the VWAP, using the volume. But I think my experience has been price action. Like, take all these indicators away, because most of these indicators, if not all of them, are lagging indicators. In other words, what they're doing is they're telling you the story of kind of what's happened in the past. And what you're trying to do is like inferential statistics. You're trying to kind of predict what's going to happen in the future. And it's almost like, this is when you have
reading the market really well. I can understand that.
exactly. Yeah.
That's what I was really good at.
Yeah.
Yeah.
So
I'm just you're getting out. If it goes the other way, you're getting out ASAP.
Oh, 100%. And these scalps are like they're quick, if I take them. And the thing is if you're wrong, it can be painful. But if
I know, yeah. Or if you place it wrong. I mean, we used to call it Polish middles. I mean, you'd be on the wrong side on both sides and really take it whack. Yeah.
Yeah, but if you're right, then what you can, like, if you get a real like momentum candle, and you just decide to go with it, like you buy at the market if you see this momentum candle that comes right out of a consolidating pattern. You're like, you know what? Everything seems good here. The momentum is upwards. The volume is good. The price side. So all of the variables are basically have high probability. And then what you do is you ride it. And if you get that right up on the initial and even the subsequent candle, now what you can do to kind of to Lance's point is earlier that he mentioned is you can start trailing your stop and you can just you can move it up and you can coincide that with the ATR, which the average true range, because that indicator will kind of tell you like if momentum moves in the other direction, then at least you can lock in a good amount of your partial fractions. But it's the day trading thing. I don't do it's you got to have nerves of steel.
Oh, I know.
And and you'll make mistakes. I made a very stupid mistake there about 2 weeks ago. I bought 10 contracts when I only meant to buy one. And I was like, what the F? Like, what happened here? But one of the quirky things in Thinkorswim is when you go into their active trader and you set up templates. So I have templates for like, one contract, 3 contract where I scale out like 1, 2, 3, maybe 3 different targets. But what I notice sometimes is the templates can get reset. So let's say you would take profit at 40 and stop loss at 20, and you load one template, and you put in another template, and then you go back to your original template. Sometimes what happens is it doesn't reset the parameters of the original template. It goes back to -1 and +1. And I really got burnt on that. And I called Thinkorswim, and I had one of the main engineers on the phone with me, and he's like, yeah, he goes, and he still hasn't resolved it. So bottom line is like, when I'm getting into like, and usually what I'll do is like anywhere from a 20 to a 30 delta call or put. Usually 25 is probably the best because it doesn't, it's not too crazy. You get into a 40 delta call, that's pretty insane, especially if it goes in the other direction. But usually what I'll do is I have my watch list, and on the queues, if I'm trading the queues, what I'll do is I'll copy each particular individual option. So if it's like a 240 put or a 241 put, and what I'll do is I'll copy and paste it, and I'll put it into like a watch list. And then in my watch list, I can flag in the watch list window, I can color it to like yellow and then tie that into my window in active trader. So if I select that option, boom, it goes right into my active trader. And then I just need to double check to make sure that the the OCO is set up correctly. But the thing is like when you do this, you got to be fast.
Yeah, setting it all up and reading it right and doing it.
And it can be,
that's my challenge, is setting everything up properly and just placing everything right.
Right.
Learning the platform.
Aiden, one thing I want to mention of all the stuff that you're doing, you could go the opposite side and do selling options with it to maybe give yourself a little bit of a buffer. So, for instance, let's say you think it's bullish after all of your indicators, you could sell a put credit spread and do it at a relatively higher delta if you want the possible premium for it. If you're still not working in your direction, as long as your delta is around maybe, I would say 0.2 to 0.3, go a little higher than what I do. If you're still wrong in the direction, it still might work out, because as long as it didn't hit your put credit spread price, then you should be fine.
Okay, and that's a 0 DT, Lance.
Yeah, you can do it with 0 DT. Yeah.
Okay.
We can keep talking. I'm just gonna stop the recording because we're getting a little off base with option selling. So let me just give me a second.